What if the market gave you every signal to buy and then pulled the rug right from under you? That is exactly what happened on Nifty 50 today. A gap down open, two previous day support zones tempting buyers all day, a fake breakout that looked absolutely real, and then a brutal sell off that wiped out everyone who trusted those levels. And I'll be honest, I got trapped too. I was expecting a buy move considering the support zones and the parallel channel structure. Let me show you exactly how it played out, step by step. To understand today, we need yesterday. On 5th March, Nifty formed two important support zones. The first, support zone 1, was between 24,530 and 24,560. This is where market first took support yesterday. The second, support zone 2, was between 24,575 and 24,600. This is the zone where yesterday's parallel channel broke down initially, but price quickly recovered and gave that explosive 200-point move. These two zones were the key levels going into today. Today, Friday 6th March, market opened gap down at 24,656, above both support zones. But here's what made it interesting. The very first candle itself closed right at support zone 2, between 24,575 and 24,600. That first candle close was the first signal that sellers were in control from the open. But those support zones were right there, and they kept giving buyers hope that a recovery was coming. From the very first candle, a descending parallel channel started forming. The upper boundary was connected from the 9:45 am candle wick at 24,688. The lower boundary was connected from the 9:20 am candle low at 24,588. A falling channel, both boundaries sloping downward. The EMA was also sloping down, confirming the bearish bias. This was not a bullish structure, but the market had a plan to confuse traders first. For almost the entire session, from open all the way to 2 pm, price kept hovering around support zone 2 at 24,575 to 24,600. Every time it touched that zone, it bounced slightly. Buyers kept getting tempted, thinking yesterday's support was holding. It appeared like the market was building a base to go higher. Most traders were positioned long by 2 pm, expecting a move up towards the upper channel boundary. And then it happened. Around 2 pm, price showed sudden strength. It crossed 24,600, moved up with good candles, and appeared to be breaking out of the upper channel boundary. This is the moment I got caught too. It looked exactly like a genuine breakout. Buyers jumped in aggressively. But within minutes, a brutal sell-off began. One massive red candle. Price didn't just come back into the channel, it crashed straight through support zone 1 at 24,530 to 24,560, taking out every single buyer who trusted those levels. Nifty closed at 24,469, well below both support zones. This is a very weak close. The breakdown area at 24,530 to 24,560 now becomes the immediate resistance to watch on Monday. If market opens flat on Monday without a big gap, this zone will be the first ceiling price needs to cross to show any recovery. However, and this is important, US-Iran war news is currently affecting global markets. Any major development over the weekend could cause a big gap up or gap down on Monday that completely overrides these technical levels. Always factor in global events before trading Monday's open. Today was a reminder that markets are designed to trap the maximum number of traders before making the real move. The fake breakout, the patient buyer trap, the brutal sell-off, all textbook. If you found this analysis useful, subscribe to Nifty Pulse for daily Nifty 50 price action breakdowns. Drop a comment. Did you get caught in today's fake breakout? See you Monday.